So it's Monday, June 23rd. It's going to be my first trade review. And I'll start from saying that I'm trading ICT concepts. And specifically, I'm trading the reversal. And, I'm basically waiting for the equal lows to be taken. And then I'm looking for the reversal. Or normally, like the whole idea, the whole strategy is I'm waiting for the Asia range. I'm waiting for the liquidity grab. So normally I'm waiting for the price to take like for example, the Asian high, like as you can see here, the Asian high or low, and then I position myself into the opposite direction. So that's pretty easy, pretty easy to understand. Of course, there is more that goes into the analysis. And first of all, I'm looking at the structure, market structure. Later on, I'm looking for the dealing range. And after that, after I understand the dealing range, I'm looking for the order flow. And also, there are things that are of my interest. Those are like equal lows, equal highs, and yeah, imbalances on higher time frame, external range liquidity, old lows and old highs, and previous day high, previous day low. All this stuff, all of these things are I'm actually using. But basically, I'm trying to understand where the orders are in order to reverse and in order to enter the reversal and buy in discounts and sell in premium. So that's basically what we all are trying to do. But I'm just explaining that. The strategy is simple. In this case, it was just beautiful. I didn't execute here, but I did execute here. But here the strategy worked out perfectly. So the Asian high was taken. My stop loss was meant to be in -1 in one standard deviation of Asian range, and I actually didn't put it there, and I didn't hold it all because it was many hours, and I'm still not used to holding trades for so long because I was trying to scalp the first presented fair value gap setup, which actually worked out for me not so bad. And when I started to look at the fractal side of the things and see the higher time frames, I actually stopped being profitable for 4 weeks, and right now I'm getting back. So yeah, higher time frame actually started to confuse me, and actually it made me lose more than make. But in fact, the more I stay on a higher time frame, the more I can position myself better. And of course, it's obvious, but it is interesting. Everyone said like, oh, you're not profitable because you are not on a higher time frame. But well, when I when I moved on a higher time frame, I got confused, and profitability just evaporated. So I had to do the proof of the concept again and explain this everything to myself. So this was a beautiful trade of last week. I was basically waiting for these equal lows to be taken and to reverse from here. But honestly, I was waiting for them to be taken way more. And I've entered here just because I saw a reaction on the 5 minutes, and there was like a return to the retracement to the OTE. And I was like, well, okay. To the golden ratio, say whatever. We had the non-failure swing, and then you know short-term low, and then on short-term low I entered and whatever. But and honestly, there was a Corpus Christi, um, what some sort of holiday, whatever, and the market was closed for 4 hours, so that was interesting. And so as for today, I was looking at the dealing range. So I saw this swing low, weird one with the humongous gap that was filled right away. And I did 3 trades today, and the last one ended up working out. Honestly, right now it's delivering in an incredibly beautiful way. 930 is delivering my freak. Oh my God, we are right now just where I was supposed to be. Ah, here I could have shorted it again. So I was positioned in the right way. Hey, okay. I didn't want to hold this, so I took off my position over here, but well, let's see. Maybe this is the manipulation move. Let's see. Anyways, I'm glad that I actually made 3R over here. So my first try was over here because I'll explain the logic. When I actually see the opportunity on a higher time frame and I saw like, oh, we reacted from this level, we grabbed this liquidity and we actually moved higher and we left the Asia untouched and whatever, maybe we are going to go a little bit lower, and I thought like, oh, let's consolidate here and then maybe the New York is going to go higher, whatever. I was just trying to find the idea for myself, like any trading idea. This was the new week opening gap. Of course, it was like this huge new week opening gap, but this was the part that was unfilled. And I was waiting for the price to come back to the consequence encroachment of that. Hey, psst. Oh my God, it's delivering. And I could have been in this trade, but I removed myself from it. It was too risky because I did two losing trades, so whatever. So I was waiting for the price to touch this consequent encroachments, do the displacement, retracement, and go lower. And honestly, I made a mistake. I had to wait for the market structure shift or something of that kind, which didn't happen. So, price just slowly was growing and growing. And then over here, as you can see, there was a sort of a displacement, right? Like if we say that this is the manipulation, this was a displacement, then this was the retracement, but this was actually a retracement to continue up higher. And here I entered 0.5R because I was not really happy with the structure, so I didn't want to risk 1R. And here I entered 0.25R just because I thought like, oh, if it's going to actually deliver, I don't want to be left behind. I want to go. Oh, so we came back to this New York Midnight Open. So this potentially could be a manipulation, and then later on the price can go up higher. And honestly, I'm not going to. It's going to be fun if, for example, we're going to take a London low and reverse to the upside. Again, this is a sharp move to the downside, and maybe on 1 hour it's going to make more sense. But anyways, interesting. Maybe that's going to be a good spot to re-enter. Here I was also shorting Solana, but anyways, we're not talking about that. Let's look here. So yeah, later on I took that, and then, only then, did I see that there was a trend line. And that there was another thing that price was looking to deliver. So here was like, I would call this an order block. Yes, of course, this is an order block, is like a smaller candle of a different color before the explosive move to any of the sides. Oh, it was a retracement to the OTE on 1 hour. Look at that. Look at that. What a beautiful delivery. Beautiful thing. I just didn't want to wait. And I'm not sure if it's going to go lower. I think this is enough. It grabbed liquidity at 9:30 opening. So right now we are going to continue up higher and potentially go to that highs. I can't position myself in that right now, and that's going to be beautiful, but I don't know. Okay, I had 3 trades today. I see the opportunity. Oh my God. I cannot even review my trade right now because I see this. Oh, that's a rejection. That's going to be a continuation to the upside. Why am I so excited about it? I'm effing excited about it. This equal lows. Okay. Okay, what I want to wait. I want to wait for the normally it's not going to retrace to the OT, or it's going to take very long time, and maybe at 10 a.m. I can enter longs over here. Well, let's see what the price is going to do. Let's allow it to develop itself. So what happened here? We created this intermediate term high, and after creating this intermediate term high, we rejected, sort of. We didn't break a structure, by the way. Like if we, depends how to measure, but we didn't break a structure at this point. We broke the structure here, and for some reason at 6:10 New York time, I don't know what time it was. It was like around 11 or something. The price just rapidly moved into the OTE on 5 minutes again, because I was trading this in 5. I mean, I entered on 5 minutes because I wanted to have a smaller stop loss. And by the way, here I was risking 0.25R, and this 0.25R made up all of the losses. So right now I am allowed to have a full, full risk on. So what happened then? I was like, okay, we took this liquidity because we took this level, this important level, not liquidity. I'm told to I taught myself to think that it's liquidity, but liquidity is actually a different thing. Let's say we took the orders, stops, whatever. Because I don't have a footprint chart, I cannot say what exactly was there. But from here, the price took this level, let's say liquidity, whatever, and showed the rejection, the signs of rejection. And I entered. I didn't wait for it to break a structure and everything because it can only go so far. It can only go so far. When I'm creating the algorithms and I'm testing different ideas, Nasdaq, as much as it grows, right, or S&P 500, as much as it grows, it actually dances in this range as crazy, and the range is incredible. It can be very very volatile. So I am not expecting for the price to actually deliver to some incredible targets, but I am looking for the beautiful trade that I can take, right? So this was the trade that I took. I mean, maybe I'm going to add the execution here and how I stayed in that trade and whatever. Here it was actually boring to wait. I was kind of feeling that it's going to reverse on me. Anyways, it's good that I take it, that I actually took that. Um, so yeah, I just waited for the price to displace. It started to retrace a little, and I was like, "Hey, okay, this is going to be one of those reversals when you can see it on 1 minute, and on 5, 10, like 15 minutes, it's going to be just a V-shaped reversal." In this case, it was actually a decent reversal, made sense, but on 15 minutes, it's more like a V-shaped reversal, right, with immediate rebalances. Anyways. So that was the trade. There was nothing special. I saw that the price took this level. It actually came up to 3 standard deviations, Asian standard deviations, and I saw that it was trending for so long. I hoped that the price would retrace just a little, and I was happy with that. If it would deliver even lower, normally I would see a stronger move to the downside. So if it would deliver, if I could like for me to expect that the price can deliver to my normal target, which would be the Asia low. Well, honestly, not Asia low. Honestly, it delivered perfectly. What am I saying? Honestly, it was 3R trade, and I think there's not much I could. But honestly, I was thinking in my head that I had to do something better. I had to do something better, bro. You actually did good. You didn't have to do that. But how could you know? I could not know. Here you should have used your full size, but you had 2 losses, so impossible. Well, I did all right. Just these 2 losses were making no sense. But yeah, anyways. As for now, we can see that's a beautiful rejection. We definitely are going to trade up higher. Using the OTE here and expecting the price to actually come back there. I don't know. I don't really know. I don't really know. I can expect the price to at least come back to here, and that's going to be a sort of it's Venom model because, and if the price delivers to this low, then we can, put our stop here and expect the price to, book us here like that and go higher, way higher, at least to the top of that imbalance to fill it all. That would make a lot of sense if we actually have a retracement to the downside, right? So, and that's going to be like, correct me if I'm wrong, but that looks like a Venom model to me. Yeah. Okay, come back to 1 hour. I'm keeping the executions of mine on one separate chart, because in this way I can actually see the history, I can see where I was wrong, and this builds up the understanding for me of the total picture of where we are in the market and where we are moving. Because before I wouldn't actually use that. I would just, I would journal my trades, but I wouldn't see the bigger picture. For me, it's always important to see the bigger picture, and I understood that only like a couple of weeks ago. So basically, I would prefer having all of my executions here and see them in this way in order to understand, so this was the place where I actually ducked up and where I didn't understand something. So, yeah, too many things on my mind. Because journaling and then reviewing those trades and even making this video, I'm making it like a sixth time already. Just trying to understand, because every single time when I start, yeah, great. Holy smokes. Okay, after that I'll be able to start looking for some trades, because that was a move. That was a move. It looks like my trade looks dumb from here, but was not so dumb. Everything was bearish, and it was completely bearish here. Yeah, I'm using this IT Foundation indicator for Solana, and I'm using RSI for Solana, and yeah, those are things that are just helpful to make a decision. And here sometimes I'm also using the RSI. I think I do have it. Yeah, but it just disappeared. Anyways, as for the entry, do I see an entry for me? No, not at all. Maybe after this market structure shift, there is going to be an opportunity for an entry like that, maybe, but not right now. I'm also using this. It's most of those things are from Craig Percoco. You can check his account. He's kind of trading ICT also, but in his own manner, because he's trading it on crypto, and on crypto you kind of need a little bit more than that, because it's not so. It's even less objective, but at least like if you're trading Solana, most of the time it's actually respecting trend lines in some way, and I found 3 minutes chart the best for myself, and also I'm using it for Nasdaq, like 3 minutes chart, 5 minutes chart, for entries, because Nasdaq I'm trading more like a day trading, and Solana is better for scalping, I would say. Again, everybody's trading their own way and how they see it and whatever. Was there anything else I wanted to share? This strategy where I'm actually waiting for the Asia high, like session high, session low to be taken, and then of course it comes from the ICT, but I started trading it from the ICT. That was actually the London Silver Bullets or something like that, and I was only trading that, and actually on 1 minute I could make good profits, but when price was extremely volatile, it would just remove me from the trade, and I didn't like it. So I've decided to look for the opportunities, and I've found videos of Jade's Cap. Man, huge respect for all that, 14 years of struggle and whatever, and I'm so grateful for you to actually come here and share all this information, because I know ICT said it all, but sometimes the perspective of other person could be it could be easier for you to understand, and that's going to be extremely valuable thing. So even myself, I'm sharing right now, I'm helping myself even more by just sharing and just talking about it and just, being passionate about markets, because I see that people who win, they are not here. They are not much for the money. They are this strategically oriented people who've decided that this is what they kind of like. Um, Correct me if I'm wrong, but people who win in the long run, they actually love the game. Yeah, so people fear death. That's why they live, and yeah, but not because they live, but because in this way they love life. Whatever. I'm not gonna be getting too philosophical here because that can be lasting forever. But anyways, so thank you for that. And he explained this strategy, and I've decided that yesterday I was like, hey, what if I automate it? And actually, he talked about it. So Kyle talked about it, and he said like, I could automate it, but it's so discretionary. And on one of the podcasts, they said like, yeah, we could automate our strategy, but then it doesn't have the soul and it doesn't have the intuition that was built up through the repetition. And I understand that, but even though it doesn't have the soul, as people might say. Oh, that here it's even easier to see. We respected the 50% of the Asia, so there's going to be the continuation to the upside. Beautiful. If we try to automate this system, we need to add the adaptive ATR, adaptive take profit, ATR stop, and Friday filter. Friday is the least profitable day for that, and also there are a couple of things. So small Asia range normally means that there is going to be some news release. So they are accumulating orders in a very small range. And small range, I'm speaking less than 40 points. That is the small range, because I was like, what is the small range? Less than 40 points is the small range, Asian range. Also, the way we measure for the bot, again, for your discretionary trading, because everything is so subjective, I decided that it doesn't really make sense for me to change the Asian box. But as for the system that we create, changing the Asia session, for example, normally we are measuring Asia from 8 to midnight, and that's interesting, right? But if we measure it from 6 to 1, we are getting the most profitable setup ever. And our target is normally in this strategy, normally the target would be, so the Asia high is taken, right? And the target would be minus 1 Asia. So that's going to be like that. The way I explained that. This provides you with better setups, honestly, and better risk reward. But in the long run, 0.5 standard deviation projection brings you better results, and I'm going to show it to you here. It's all very, very much subjective, but I've learned that smaller Asian range, if you're trading from the Asian range and you're trying to understand what Asia is doing and whatever, um, Asian range less than 40 points is going to deliver the low probability setup, and that's important to know. And you can only get this by logging the trades and everything. And that's a detail you wouldn't even actually pay attention to normally when you're trading discretionary. You can only get it when you are actually trying to build a system. So that's interesting that you learn the strategy, and it is better if you do like a wipe coding or whatever and try to create your system in order to see the profitability in the long run, because like literally manually backtesting it, results are going to be better, but the system is a system, right? If it should be worked systematically. And of course your discretionary view makes a lot of sense. But anyways, so what I was thinking, and I'm saying I'm more talking to myself, like literally I'm just reflecting over here. So if we change to 8, the profitability drops, dramatically drops, almost 50%. I think like 30% of the profitability drops just by changing the box. Look, 4 was 6, sorry. Now the next thing, the next variable, we can change to we normally measure Asia from 6 to 1 p.m. 6 p.m. to 1 a.m. New York Standard Time. If we change this, normally we measure it 8 to midnight. I'm measuring it 6 to 1 a.m. because this is the most profitable setup, and the equity curve is the most stable. We can get a little bit more profitability if we change our targets from 0.5 standard deviation, which is like a low hanging fruit, to like to the beast. But then we see this dip in an equity curve which I didn't really like. If this is a system that works on its own, and of course I'm observing it and cutting the losses fast and everything, if I see that the setup is just not working out, then I'm going to cut it, of course, and but I still want it to be more or less stable. Yeah, so that's all I wanted to say. I didn't really think of what I am going to say, and also cutting all the profits at 10 p.m. So it means that taking profits at 10 p.m. and closing all of your positions at 10 also makes sense. Because, for example, if we cut at 8, profitability drops immediately. Oh no, actually at 8 profitability didn't drop. Let's see at 23. Profitability grows, but not so much. So at 0, 5,001. Next day, well, 23, let it be 23. And the equity curve is still changes a little, maybe gets a little more. Let it be. It's not, at this point, it's not so bad. Profit factor is not actually pretty good. Profit factor should be at least 2, but this is what ChatGPT said. Maybe for somebody who knows how the strategies are done, they are not they're gonna say that, oh, this is good. I don't actually know. Maximum equity drawdown 1%, which is fine for me. But I'm using a $100,000 account. For some reason, if I put the $10,000, it just doesn't want to take any trades. I don't really understand what I'm doing wrong here, but I'm going to find out. And I'll try to actually run this on, let's say, on a test FTMO challenge, and see how it's going to perform over a month, and then see if it's going to pass the test challenge. Then there is a chance that it can pass the other. There was a problem with this strategy, which I need to add like a high time frame trend filter or something like it. The losses are huge. Profitability is high, but losses can be very, very big. Very big. And I need to understand what is the drawdown, because sometimes is there a profitable trade with a huge drawdown? There's actually no profitable trades with huge drawdown. So if it goes, it goes. That's what we can know. It doesn't get more than $100 into a drawdown. Yeah, sometimes only on a big trades. Sometimes it gets 140. So I would say that it's unnecessary to risk more than $150 on this. Because if the price goes against you more than $150 on a $10,000 account, risking one lot, so this is one lot trade, then it's already invalidated for me. This can be already invalidated. In this case, I'm going to discuss this with with the ChatGPT and try to find how we can how we can mitigate those losses or make them smaller. And I think this strategy is going to be even more profitable with the less with lower dips. But overall, I can understand that from like observing the trades that it took, it makes no sense to risk more than $150. So here it would be risk 150 because normally if it gets more than 150, it just makes no sense. This is a weird one. The drawdown was 148. Yeah, okay. Like you can see, the profitable trades are not actually having a huge drawdown. I can even say that it is healthy to have, yeah, 150 or something. They do not, like profitable trades do not exceed the drawdown of $150, which is okay for the 10,000. It's a lot, you know, for the 10,000, but you are not taking trades every single day. So it's basically okay. Here it also actually has the break-even trades. This is interesting. Okay, so we had this review together. I'm going to think of how to protect capital. Lower the, cut the losses. Because it makes no sense for it to risk. Because sometimes, sometimes it makes sense to risk more capital in order to have a bigger move. But in this case, because we have we have it limited to 0.5 standard deviation as it on the take profit. Also, I have an adaptive take profit. And adaptive take profit doesn't really work much better. It's 5,000, so it works worse. So it's easier to have it standardized. And in long term, this strategy can be making money. And I would understand that, like, over here, I treat this 100,000 as 10,000 because basically the losses are bearable for a $10,000 account, literally. But for example, if we have a, let's say, $1 million account, this would be how much it would be. Let's see. Still 6,000. No, there's something wrong with this, with the calculations it has, with the calculations it does. There is, and I think the person who understands how to code, they would already understand that there is a problem with the sizing. But yeah, there is definitely a problem with the sizing, and I need to fix that also. But other than that, I'm willing to, even this version is enough for me. I want to see what it did in, for example, May, and how much it would make. But May was very profitable. Look, 122, 9, 170, minus 45, 122, 136. No, I mean, this would be enough to potentially be close to passing the challenge in 2 months or something, and then constantly be making money. Well, anyways, just sharing what I'm doing here. Hope you loved this time with me, and I'll see you in the next one.